Good evening, y'all. Did a little chart prepping, and what I'm gonna do is I'm gonna turn on the indicators one by one and see if the indicators agree with my analysis, and I'm gonna explain my understanding of why the indicators are in agreement with my analysis. And the first one that I'm gonna be using, if you've been watching, you see me keep going to it, refer to it, is the Ichimoku cloud. I got a confirmation on a position, or not a confirmation, but uh, a red cloud generally with a sideways market or consolidated market gives that high probability that we know that the candles fall through a green cloud, right, or a bullish momentum cloud, and it goes up through a bearish momentum cloud. So we got the candles. Right, we got our drop through the red cloud. I meant through the green cloud. We got a big wide body for this bearish cloud, and I'm just referring to it in that manner. Um, but generally, when you see this, the candles in this position, candles tend to want to go up towards the cloud, right? And bare minimum, we'll see price come up to the bottom of the cloud somewhere along here and meet resistance at the cloud first. And then if it breaks through that resistance, we'll see it continue up through the cloud. Price comes up to the cloud and gets a rejection, then this bearish push is going to continue down. But in the meantime, I showed it here with this measurement tool. It's a long position tool showing that the best entry would have been right here where price was going sideways anyway in this area, in this box. And you can look for price to go anywhere all the way up through until a candle at the bare minimum pokes its head out of the top of this cloud. And we see that just from what's been going on in the market, we run into another equilibrium zone right here where we'll start to see some major resistance in price either retrace or reverse and continue on this downish or bullish push. So you get your quick scalp buy position, or whatever you want to call it, scalp. But we definitely will see it. Second confirmation would be this lagging span, which is also a part of the Ichimoku cloud indicator. We can see that this indicator is for 1 point up, and for 2, it's on the brink of breaching through the candle pattern. And one thing we know is that if the lagging line breaches through the candle pattern, that is a signal that the probability is high of these candles breaching through this cloud. So we want to kind of watch for that as our second confirmation. I'll turn the cloud off so we can see some of the stuff. Third confirmation, I'm going to go to just a simple moving average to see where it sits. And we got price crossing over that moving average at our special setting. And that's another indication or confirmation of our position we see here. Once the candles break past this EMA in either direction, you can see when the candles cross and broke over right here and right here, right, it signaled this drop. So we got the candles starting to break past. We might get another dip down into this zone before price continues up and starts to test these resistance levels as price moves up. We already seen just about a 40 pip movement in this position from about 18 to here 22, and it's starting to catch a little bit of this volatility. Yeah, I'm about 40 pips on the position so far. We'll turn that off. We'll go to the best of the best, my favorite. the Bollinger Bands. And they get a lot of ridicule and all of that, but I will use the Bollinger Bands and get in a competition with anybody in the market using only the Bollinger Band. And the Bollinger Band is starting to give us confirmation as we move into the bullish half of the Bollinger Band. We cross the baseline of the band, and the band is starting to open up the river to let the money flow in for the bulls. So we can kind of sit here with the Bollinger Band, make it plain and simple when the candle's on the top half of the Bollinger Band and the bands point in opposite direction, that signifies a bullish push. If the candles are on the bottom half or below the yellow or baseline of the Bollinger Band, and these bands point the opposite directions, you're going to get a flow that way. And we just see the bands opening up to allow this bullish momentum to carry price up. And we will more than likely go up to test this resistance level at 23.2755 before we start to see any major resistance. And from then, I'm of the opinion we're going to kind of see something like this tonight. Price is going to come up, come down, come up and break it, come down and use it as support, and then push up, and we might see somewhere around 2340 to 2350 late night, early morning, maybe possibly in the New York, London crossover market tomorrow. I don't think gold is going to continue in a sell position. There was some news and market manipulation that caused this just about 600 or 700 pip drop on Friday. And I'm mad that I wasn't in the market to get some of it. But, can't lose on trades you don't take. And we don't cry about spilled milk. But analysis for the week is that gold is going to struggle its way back up into this area where it was floating around at. And we can see last week it kind of did the same thing, consolidated for a couple of days, and then caught some momentum and pushed up. And then it comes big business and governments and everybody manipulating the market to fight to keep these fiats with the relevance that they have. So we're going to spend the week pretty much scalping buys and gold. We're going to sell when we get the opportunity, but I am looking for a pretty bullish week, meaning price is going to recover. I don't think gold is going to be going down. There's no reason for gold to go down in value. There's no reason for gold to go down in value. We're definitely not going to see any of those $1,800 and $2,000. I don't think we're going to see those prices in gold anymore. So this week we're going to be looking scalp, buy. We'll catch some sales when the time comes. But I'm of the opinion that if we go to a 4-hour chart, we can see that gold is on this upward momentum, right, for the month of July or June and July, going into July. We got a major pushback right here, but I don't think gold is going to continue further. As we can see, it met support here, right where it was supposed to. So I'm thinking we're going to get a continuation of this bullish push, and gold will continue to go back up and test these 3 levels here. If we see a break in these 3 levels, then we will most definitely be setting a new ATH for gold. And just some other things to take into note when it comes down to knowing when we played our part in this position. We can just mark this downtrend that also occurred, or also can be acknowledged. I take more credence to the bullish momentum in the market because I just think gold is on a buy, for the year, being the economy and everything going on. So we got the divergence right there. We'll go, we'll make a decision. But we can see it found support right where it was supposed to find support. All right. So that's the natural movement of the market. We have a little bit more confidence in our position, being that we saw that. Gold really ain't that difficult. Trading really ain't that difficult. It's just about understanding certain simple things that come along with trading gold or being in the market. If you can understand certain aspects, very, very simple aspects, you'll be able to be profitable in trading. Pretty much I use the same technique. It doesn't matter whether I'm trading either one of these in my little favorites list. I trade the euro to the US dollar, gold to the euro, USD to the Japanese yen, Swiss dollar to the Canadian dollar. I do very, very little crypto trading, Bitcoin, USD CAD, and then this is just another chart that I watch gold on, which is based on the CFDs on gold. So let's just stay focused, sit back. I'm gonna keep the chart up, and we kind of watch this play out. From time to time, I come back if anything changes and update the chart. We're on a 15-minute chart, which is what I generally use to trade. I don't get into these lower time frames, 1 minute, 3 minutes, 5 minutes. Sometimes I will go to the 10-minute for informational purposes. And once I'm in my positions, I like to maintain and look for my exits on the 5-minute chart. But anything lower than 5 minutes is very, very, I don't want to say not accurate, but you kind of have to have some super systems to be able to move with the market on those time frames. You got to have something that's going to actuate your trades properly on basically with the right timing. Because when you're doing 1 minute and 3-minute charts, you're generally looking for 10, 20 pips and in and out of the market trading. Most people that trade like that trade abnormally large lot sizes. And that's just not a technique that I recommend. I recommend looking for a little bit more movement out of the market and using smaller lot sizes. That way we can get our 3-to-1 risk to reward ratio, meaning for the amount that we're risking, right? Or the amount we're saying, okay, we're going to use for our stop loss. So we're going to let price if it does go the opposite direction, this is the most we're willing to lose in a drawdown on the position. And this is what we're looking to gain on the position. So you always want to have a 3-to-1 risk to ratio. So meaning I'm willing to lose $1 trying to make 3. And that's generally my way of trading. I'm in and out, but in a different way. Not one of those push the button in, push the button out traders. When I trade it like that, it seems to be a lot more high risk and hard to find solid positions. Trying to run with each one of the ups and downs in the market on a 3-minute, 1 minute, 5-minute chart. I like 15-minute candles because they kind of give you a better idea of the true momentum of the market. So I would go from 10 minutes, 15 minutes, 20 minutes, and up. Straight from 10 minutes, 15, 20 to 1 hour, and then to 4 hours to do my analysis. The 1 minute and 3-minute charts, they just don't do anything for me. So I would suggest, especially if you're new, stay away from them. If you got a little bit of experience and you can understand the movements and move with it on that timing, then go for it. But I generally like to sit around the 15, 20-minute charts and analyze, and a 15-minute candle gives you more information than a 1 minute candle, because a 1 minute candle can go the opposite direction, uh, 10 times as many pips as it moved in the other candle. So we're just gonna sit and see how position play out, and I get back with you guys in a few minutes. If you're in the signal group, keep your eyes out for signal. Manage your risk wisely. Use small lot sizes is what I advise. I don't tell people what to do with their money, but that's how I play around with mine. I use small lot sizes, and I go for a 3-to-1 ratio on all of my positions. So let's sit here and watch. You guys welcome to stay with me. I'm gonna be here in the background analyzing. If I need to switch screens, I got 3 screens that I watch it on. I'm always watching charts from 3 different time frames. Generally, the 15-minute, the 1 hour, and I'll alternate between the 5 and the 10 minute. And I use these to manage my positions that I'm already in. I can kind of get an idea on a 15 minutes candle. It's got 2 5-minute red candles inside of it. Then I know the momentum is changing. So kind of just be mindful of that. If you got one monitor, watch it on the 15-minute. Most of you may have the trade war chest indicator, which is a killer. Let's see. You see, we got our buy right here. It told us buy on this candle. All right. So as usual, I think we got the best indicator in the business as far as accuracy and give you the position for the money. I don't know if y'all can see it. Let me make it a little bigger. Wait, you see it gave us this buy. And if you're using the indicator, you just got 40, almost 50 pips from the trade war chest indicator. If you don't have the indicator, reach out to me, and definitely see about getting you the indicator, which is super, super, super powerful. I haven't seen an indicator that can compete with it. So I'll be right here with y'all. I'm gonna get off the screen, and we're gonna watch this and see what happened. And I will be updating the chart as things go. But this is what I think is gonna go on for the week. Gold is gonna move in this zone, and it's gonna test these different levels of resistance. I don't think it's gonna come down and put too much strain on support, because I just think the market is an overall bullish market. I got you, Jack. This indicator is definitely on kill. I'll be coming back in a few minutes and see him watch what's going on. And I got different charts showing. I have 3 monitors here, so if I see anything I need to update based on the other time frames, I will. And as things go on, I will come back and update you guys on what's going on and just give a brief description of what's happening with the market. Stick with us and let's get this money tonight, y'all. Pull us some money out of the market. Y'all can see, I told my mic is like echoing. I don't know what's going on with that. Let me hook my other microphone up. That might be what's going on. But as we can see, where our first major resistance is going to be, if you took any positions, my advice and what I tend to do is once my trade is in profit, as we can see with you, all should have got in this uh, buy zone, right? And once my trade goes into profit, what I'm doing is my stop loss is no longer downhill. My stop loss is, you know, 25, 30 pips behind where price is. So if we do get some news or anything that affects price and makes price reverse or go in the opposite direction, it will automatically get closed out either in profit or at break even. So generally what I do is when my trades go into profit, I'm moving my stop loss up to break even. And then once I go into, 30, 40, 50 pips of profit, then I'm going to put my stop loss to where that I'm going to at least gain 10 pips in profit. And as price goes up, I'm going to be moving my stop loss up with price, keeping it, 20, 30, maximum 50 pips behind where price is actually at. Once we get money out of the market, we don't give it back. So that's just a little tip for you guys if you want to make sure that you're securing some of these profits. And right now we're about 70 pips. I got 70 pips on one of my positions, about 50 on the other. Got my stop loss moved up. My stop loss right now, the price is at 23.25. I'm gonna be moving my stop loss to 23.22. So I'm gonna bare minimum get 40 pips profit out of my position, being that I got in at around 23.18. So that's just a tip. One of the tricks I use to make sure once my trade is going profit, I don't get none of the money back. Or the bare minimum of the money back to the market. We can see on the chart I marked where our first major resistance is going to be, and that's just based on the general theory implicated in the Fibonacci retracement tool. That price will always retrace to 23% bare minimum. If it breaks 23%, the next stop will be 38%. And on average, you're going to almost always see a 50% retracement. So we should be able to cover this position tonight. It may take some time to cover the entire position, because we're looking at a 200 pip movement in the market. But I am confident that over the night and going into maybe New York market, this 200 pip will play out. And, we might get a sale in between, but we're gonna be looking for the market to push up. I'll be back with an update as things go, and if I see anything that I need to add to the chart, I will come back and give an explanation for it. Stick with me. Hopefully, you guys are watching the charts on your own chart and marking it. It don't have to be the same as mine, but get the general concept of how I use these, what I like to term equilibrium zones. People refer to them as a bunch of different things: supply, demand, support, resistance. It really doesn't matter what you call it. What is more important is the understanding you have of what you are actually marking on your chart. So I'll be back when we get another update, and let's get this money, y'all. Y'all can see we're approaching 75 pips on the play. The 5 positions I have. You can do the math. 75 times 5. Easy. 375 pips in that short period of time. And that's how we kill the market, y'all. I'm looking to hold out until around this first major resistance. I got my stop loss bumped up, and if it come down and stop me out, I'm only going to be looking to re-enter. And I refer to that as layering my positions. But I do think we're going to get this movement, like I said. And even with what we got right now, 70 pips, 75 pips, beautiful position. So let's maintain our focus, right? And as I said, I always secure those profits. We see it doing a little retracing or correcting, which is expected. But we got to have the wherewithal to understand our goal and our analysis. Right? And we got to have confidence in it. That's going to be the key. So as we look at this little retracement, I'm not worried for one because I got my stop loss in a position where I won't be losing no matter what happened with the position. And I am of the mindset to where that if price comes down to a certain level, I'm going to layer and take more positions. It's not hard to get in the market and extract you some money right quick. That's the goal, to get in and out. We were actually able to do it within an hour tonight. I'm gonna let the chart sit it out until 10. At 10, we're gonna get out of here. Every Sunday, we're gonna come here and we're gonna do our analysis. You guys are welcome to join me. And any questions, just reach out to me. And I will most definitely not have a problem with answering or helping you with whatever your concerns or questions may be. DP, Trade War Chest. And we out. I will see you guys in training on Wednesday. Follow the signal groups and trade cautiously, manage risk. Make sure we're using the proper lot sizes. Until the next time, I'm gone. DP.